I actually really do get scared of a whole generation. They won't own homes. I mean, that's very scary. It's actually terrifying because I want people to have buy-in into this country. I think that real estate being a store of value, the way that it is today is very unhealthy. We know without a doubt that the way to have a good citizen, a responsible person, is to have them own a home. They're more likely to start families. They're more likely to get involved with their school system, with their soccer leagues. They're more likely to take care of their house.
There's Maslow's hierarchy of needs. Like you could be one of these like anons on the internet that's like sell everything and buy Bitcoin. And it's just like, yeah, get on zero crowd. How's it going right now if you're having to spend your Bitcoin? That's why I think it's very important to take a rational approach, get a little bit of both, because people need to aim to own a home. They need to have ownership of something.
What we need to do, I think, in order to move the ball forward is empower Bitcoiners who have all this wealth stored in Bitcoin to acquire real estate.
Yes.
Right now, if you're a Bitcoiner and you're sitting on a bunch of coins, and let's say like you're this early retiree OG status Bitcoiner, you don't have actually a credit profile, traditional credit profile in most cases, where you can go to a bank or a mortgage lender and get a proof for a loan relative to your wealth. You can probably get some mortgage, but like most traditional banks don't even look at Bitcoin as an asset on your balance sheet. So I think that the key thing, and the kind of the phrase I've been using is, Bitcoin is your credit worthiness, right? Not your FICO score. It's like the fact, are you willing to put Bitcoin up as collateral? Cool. You can have as much fiat as you want for all I care. Like, I know, like there's solutions already that are lending against Bitcoin. I get that. But I think real estate is a different thing to try to solve, because frankly, there's just so many regulations around it. And so I think we have to create a product that someone is willing to basically cross-collateralize a piece of real estate with Bitcoin, so that if you default, you're basically putting both up as collateral. But it very much serves as a way to transition into this new reality where we no longer have to rely on FICO. Your FICO score doesn't matter. Because it's the proof of work is in the fact that you have Bitcoin, right? And that's more valuable to me than looking at your W-2. What does your W-2 show me? What is your pay stub? Doesn't even really tell me your future potential of paying on time. That's an old, antiquated way of thinking about things. Whereas now, if you hold Bitcoin, if you're a Bitcoiner, that tells me basically, as a creditor, I would say, it tells me all I need to know about your credit worthiness. So like in lending, one of the hardest financial profiles to lend to are self-employed people, people who have their own businesses, because they can't cleanly document a steady source of income, and because they're actually incentivized to report as little income as possible in their tax returns. So they kind of shoot themselves in the foot when it goes to lending, right? And so the same is true of anybody who is not W-2 employed. It's really hard to establish a proof of, here's how much money I make, therefore here's what I can afford. So when Bitcoin becomes your credit worthiness, the entire game changes. And that's the other thing too right now, is it's like, why is it that you can qualify to rent a house where your monthly payment's gonna be $3,000 a month, but you can't take that same financial profile and go get a mortgage where your payment's gonna be $3,000 a month? Doesn't make any sense. So there's no sense of fairness or consistency or anything like that with the current model. Whereas with Bitcoin, it's just very, very simple. Put up your Bitcoin, and I'll give you a percentage of that.
I think it's helpful for people to understand that most mortgages in the US, and the reason why we have mortgage rates that are really low, it's because those loans essentially go to Fannie and Freddie, right? These quasi-government entities that were created to promote homeownership, right? Promote primary homeownership in this country, right? The American dream, right? That everybody has a right to own a home in this country, and if not, own multiple homes. And so it starts with that. And in order for this to be scalable, where $2 trillion of mortgages get originated a year, they've got to conform to some type of standard, right? It's got to be fairly consistent. You've got to have this sort of like pass or fail methodology so that originators can go out and do loans. And customization and bespoke structures don't really work well. So that means that a significant portion of people who want to buy homes, who are financially qualified to do so, but can't document things in that way, are immediately disqualified. People that have crypto wealth are generating income through DeFi and through investing and staking that doesn't really document too well, right? That's not something that you're going to be able to go and say, here, I'm going to get a really nice W-2 or a great 1099 to be able to sort of prove this and file my taxes. And, many individuals have tried, but it's very hard to sort of build that financial picture that's required to get a conventional loan. What a lot of people don't necessarily understand about crypto consumers, and I think people who don't have crypto, who don't own crypto, they don't understand, like, what does it mean to actually own it, right? And the factor of, and what I mean by that is, most of the individuals that we've worked with, they didn't buy Bitcoin 6 months ago. They probably bought Bitcoin 6 years ago, right? So they've gone through these ebbs and flows of, peaks and valleys and sort of price and it's a very emotional transaction, right? It's emotional because they want to continue to own it, right? They have this thesis that it's going to be worth significantly more in the future. And this element of being able to give them that optionality to basically buy that home today is incredibly important. And alternatively, they would have to make a very difficult choice, right? Sell something that now has essentially become an extension of your own identity, right? Of who you are as a person, because you bought Bitcoin. It's become your network, right? Like, you've associated with people, like you're on forums, you're following, you're reading, right? You're getting educated. And then you would have to give that up just to buy a home. It's something that a lot of people, wouldn't necessarily do. So I think that I found out that this is a much more sort of engaging relationship with these consumers, and the trust factor of them sort of pledging it with us. It's something that, I personally view as a very, very big responsibility because of how long they've held this crypto. So I think it's a fundamentally different transaction than just a straight up mortgage, right? We're there, we're aligned. Like, we're all trying to basically make sure that this turns out to be a good transaction for. I bought this home a year ago. I had to sell some Bitcoin. I really had no choice. And now this is an option for them to take some of that cash out. Hopefully they sold Bitcoin at 50,000, and now they can go back out and say, here, I'd like to sort of cash out, and I'd like to basically either invest or buy more property, or or buy more Bitcoin, or buy back. So we're seeing this as a use case. This is something that, as we were going through the process, people were asking us for this, just like the 40% down stablecoin product, because there are so many consumers that we found that we're saying we're living in this digital world. We don't really earn dollars. We don't really do this. All of it is tied up here. It's going to be really hard for me to reverse document all of this for the last few years. Could you come up with something like this? And we did. And I think the direction that we're going into is getting away from that sort of one-to-one, and what else can we come up with so we accept a lot less, and then this starts to feel more like a conventional product. And then the element of branching out and then doing primary home loans for more people, and then sort of just continuing to see how do we serve more and more consumers over time, but making sure that we're doing it in a compliant manner, because we have a responsibility to sort of this category, that if we do things right, then I think it'll grow and more people will come into the space. And if we get tripped up, then people will say, well, there was a reason for that, because it was crypto, and I really don't want that to happen.
At the end of the day, what is money used for? It's used to make our lifestyle better. I mean, yeah, sure, you can talk about your 40-year retirement plan, and that's great. Yeah, and that's how I view Bitcoin. Bitcoin is my savings and my retirement, and I'll always be thankful to have that. But truthfully, does that help my lifestyle right now? It really doesn't. It helps in no way. And so the value of cash flowing assets in any industry or realm is that your money is literally making you money, and you have that ability to go on that extra vacation, get your kid whatever they want, an ATV. I don't want to live my best life at 70. I want to live a life right now. And so I don't think that there's anything besides a major inheritance that comes close to cash flowing assets. Don't discount it at all.
I can't live off of equity, right? We call it lazy equity, right? So if I'm not getting cash flow from it, it's somewhat useless to me, right? It's all paper wealth. It's just like, 3-4 months ago when Bitcoin was trading at $67,000, right? We're like, I'm Bitcoin rich, right? It doesn't really count until you cash it out. So cash flow is one of those things that I can count on now, and I can count on it today. And in the world of commercial real estate, like a non-cash flowing property is worth nothing, right? Because the whole entire thing is valued off of net operating income and cap rate.
Yep.
So, I guess it's a little bit different if you have the cash and you can, tie it up and own the asset outright and there's no debt on it. But I don't know why you would ever do that, like, especially when the dollar's depreciating at 9% per year and you're tying up all this cash, and there's still pretty cheap debt out there that you can get and get levered up in order to actually generate cash flow and net long-term, build your money and your wealth even more.
First thing I'm doing, which, some hardcore Bitcoiners will disagree, is I'm buying some real estate assets. So if I'm ever not here, my wife has some money coming in to help pay bills. But what I do is, as soon as I get that cash flow coming in, because it's above and beyond right now, I purchase more Bitcoin with it, because I understand, Bitcoin's pristine collateral. Down the road, I want to have as much Bitcoin as possible when it's 500,000, a million, and use it and leverage it to get loans at a lower rate, because I'm less of a risk factor than a normal borrower. So that's one component. And ultimately, like I mentioned to you in the tweets before we did this, I am not an underwriter. I do not care to be an underwriter. I don't want to be an expert at Excel. And that's what makes real estate very powerful, is you build a team of people and you can get a lot more done. So in my approach, I'm, 20-30% real estate. The rest I save in Bitcoin long term, because I'm an entrepreneur. I'm a business owner. I know how to scale businesses. I know how to take down real estate deals with my team. And I want to have Bitcoin to leverage in the future for more businesses and creating cash flow. The ultimate goal I have is I want to do everything I can in dollars to replace the bills I have monthly. So let's just say I have 5,000 in bills monthly. And right now, cash flowing wise from my real estate, let's say I'm making $1,500 a month. There's a $3,500 gap. I don't want to just go all in on real estate and try to fill that gap. I must, end up with more Bitcoin each day, as we love to do, dollar cost average, weekly, monthly, however you're buying it. I view it like that. And I think the wise thing that a lot of people don't really take into consideration is this team component. You don't have to put your own money into real estate deals. There's something called OPM, other people's money, where if you're a hustler, you're going to put in the sweat equity. There's a ton of people on the sidelines with a shit ton of money. Like these real estate syndication deals, they'll send an email blast out that says, hey, we're going to get you 7% cash on cash return, 18% IRR, and an equity multiple of 2, meaning we're going to double your money across the 5 years. So these things fill up in 10 minutes. Like you're going to get beat, like as far as allocating money there. So if you can bring the sweat equity and work hard and have a capital partner, you can actually earn cash flow, which immediately, if you put it into Strike or use Swan, it is Sats flow. So you actually do not have to just use your W-2 income. There's very creative ways to approach it.
If someone doesn't own anything that cash flows, they only own things that appreciate, what would you tell them?
I would tell them to find a syndicator, a group where they can actually deploy capital as a passive investor and start getting access and exposure to passive cash flow investments, as well as the tax benefits that come along with owning real estate.
In my last marketing agency, I had a guy who flew drones for a living and he recorded real estate. And I was like, dude, this isn't all you do. You don't make a ton of money. And he said, Bobby, I'm in syndications, which is real estate syndications, taking down large deals, economies of scale, way bigger returns, government tax incentives. That's how you basically pay zero taxes, is you reinvest into the infrastructure of America, which is apartment complexes and larger buildings. So instead of buying an apartment for $200K, you buy 50 plus of them, 100 of them, and they're like 50, 75,000 a door. And whenever he said that, it clicked. And then 2 to 3 months later, I had a big portfolio of about 500 million in real estate come through. And this organization had me manage the marketing for about 14 apartment complexes. They were underperforming, 80% filled with tenants, get them up to 90 plus percent, 93. And I just learned everything about that. And I started getting into single family because I was just like, hey, I can buy a home, make it a rental. And, you might cash flow a few $100 a month, but if you get into larger deals, there's tax incentives where you can write off all the earnings, like you're not taxed on what you're making. And there's a lot less headache. Like there's passive and active investing, just like active managers trade stocks. Passive ETFs allow you to have diversification without having to manage it yourself. So this is really what the richest people in the world do. Like if you look at the top of the Forbes list, tech billionaires, oil companies, CEOs, and then at the bottom, real estate moguls.
The entire capitalistic society that we live in was set up to encourage people to create jobs and encourage people to create housing. And if you want the maximum benefit of the tax code, then do those two things. Create jobs and create housing for people. And if you can be in a business that creates housing for people and simultaneously creates jobs, then you can literally live in a completely tax-free world and never ever pay taxes ever again. So I think, there has to be a real impetus and desire to go say, hey, I want to make that my business. Do I want to be in the business of real estate investing, or do I like the idea of investing in real estate? Those are two totally different things. One's a career
Yeah.
path, and one's an investment strategy. Probably should be a passive investor if you don't want to actually go do the work and be the operator. I generally love the game, the hustle, putting the deal together, raising the money, talking to brokers, calling on owners, and doing all that. That is the game to me. So
Yep.
And one of the big things I notice in just the Bitcoin circle is when people talk real estate, they always only talk about residential. And, Bitcoiners love to say there's nuance to this and that, but they always love to leave out the nuance of the real estate side. And what's interesting is residential real estate, it operates on comps, meaning you load Zillow, you look at what sold this last week. That's how you're going to likely sell your home, is in that realm. And we saw Zillow have a blow up. They bought a ton of real estate, try to pump the prices up, and then they got left holding the bag. That's the downside of residential, where commercial is unique and valuable. And why I focus on commercial and why I want to hold everyone's attention here today is commercial real estate. When you're over 4 units, when you're at 5+, you're now operating on NOI, which is net operating income. So if you can buy, let's say, a 5-plex, and let's say each door is 150 grand, right? You're in for $750,000. If you can find ways to add value and improve the living experience and increase the rents, your property is now worth more because it's operating on a net operating income. It's not based on comps. So what's really unique about this and why it's valuable is whenever the real estate crash happened, in 08, 09, when we had the financial crisis, it was due to bad loans. It was due to people, the equity in their home was worth far less, and the banks would even close these loans out if people were making payments. So yes, there's inherent risk there. And we're not here to talk about how you can make residential successful. You can go to Bigger Pockets and learn all about that. But where I find value for Bitcoiners who are quote unquote real estate averse or risk averse, I think commercial real estate offers a very compelling investment thesis, is because of the net operating income component, because it's a business. It's an actual business. And a couple of quick facts I want to mention before we dive into deeper questions are, majority of the apartments in America were built in the 70s and 80s. And if we don't repair them, there's going to be a massive shortage. So that's why you see these, it's called value add investing in the multifamily space. So that's one big component. The other thing is there's a shortage of over 10 million homes. COVID caused a slowdown in home builds, and we have a massive shortage of homes by about 10 million. And we know most apartment complexes, they're going to dilapidate and fall apart unless we fix them. And we have the biggest cohort of home buyers ever, which is our millennial generation.
When you invest in a larger commercial project, though you don't own it outright, right, you're getting access to a bigger, larger, more scalable investment that's theoretically safer. And you can get the same, if not better, returns than you ever could by investing on your own, right? Mm-hmm. $50,000 invested in a $30 million project is probably going to get you access to a better asset than taking that same $50,000 and putting it in a $250,000 asset, right? So there's pros and cons to all of that, but coming from the world of trading futures and commodities, I'm always thinking about things in terms of risk. In the world of futures, it's highly, highly leveraged. So unlike stocks or even Bitcoin, where if I put $100,000 in, the maximum amount of money I can lose is $100,000. When it comes to trading commodities, your leverage is sometimes 10x, right? I can take $10,000 and I can lever up to buy a $100,000 crude oil contract. And if that thing goes -40, like it did last year, then I could be losing $100,000 overnight. And I've seen it happen multiple times. But my mentor told me, you're going to lose a lot more than you're going to win. So you should always be controlling your downside, because your winners will be 10x what your losers are. And so scale in a larger deal gives you better risk mitigation, because like a large commercial apartment complex, you can have 20 units vacant and still break even. Mm-hmm. If I have one singular property that I own outright because it makes me feel all warm and fuzzy, and it goes vacant, it's 100% vacant. Mm-hmm. And I have no cash flow, and the mm-hmm. debt, it's coming out of my pocket, right? So larger commercial involves commercial banks, non-recourse debt. And so the bank is, you're going to make sure that that asset will sustain any kind of downturn in most cases, right? The default rate on large commercial multifamily in 2008 was 0.04%. So less than 1% of those loans went into default. Why? Because cash flow is king.
I like rentals also because they are commodity, which is a much better determination of like how much people value it. There is like an upper bound where like rent can only be a certain percentage of income that people have. So there is obviously like lots of other inflation or other things that go along with it. But like at the end of the day, people are going to spend in rent like a certain percentage of what it is that they are making. And they are going to differentiate between one thing over another thing in apartments based on how much they value it. So for something that's going to be how close that is to like their work, their kids' school, all that other stuff, like how close that is to all those other points. And it also has to do with the makeup of that space itself. And that is something that is not done. And again, I think there are lots of different examples. Zestimate is a perfect example because their model, because they don't measure it, cannot tell the difference between like pretty or ugly, right? Like it just, or some of it is too difficult. Like, I don't even know how you would do that, like in an algorithm. So I understand why they punt on it. So their algorithm is going to be some like range of square footages in an area and say like it'll be some probability that it's between $380 and $420 a square foot. Fine. That's the best like approximation you do. But to me, the journey that I want to be on is like find out how to take space, turn it into things that are a little bit better, to give tools to people and for tenants to understand pricing better so that you can then design the things in ways that people want to use more, and rather buy some different like biases, because it turns it even more into a commodity, right? Like if everyone builds the same floor plan and the same particular unit type, then the only thing we differentiate on is like who has the most up-to-date amenities and who has the nicest finish. So either you have to be the most beautiful apartment in the world forever and the coolest, or, which isn't possible, you're going to keep being on that rat race of like fighting forever. So, or I guess the other thing you can differentiate is price. So you can be priced lower, you can be cooler forever, or you're going to need to keep upgrading. And that doesn't seem like a particularly good like business strategy to me. Where the reason why it happens though is because different sort of developers, or again, the way that things work is someone says like, I'm going to build, I'm going to hold it for a period of time, and I'm going to sell, right? So there, you only need to time things by like 3 to 5 years. Uh, there are people who are more sophisticated, and it's and I guess maybe so again, I'm pretty unfamiliar with Bitcoin, but I would say the people who make the best real estate decisions are the people who make decisions like with their own capital, with like long-term hold like in mind. Someone says like, I'm going to build this, I want to own this forever. I mean, some of that is just common sense. Like you're going to build the highest quality house if you do that for yourself. Same thing for like an asset. You're worried less about cash flow today. You're more of like, I just want to build it. I don't want to worry about it. I want to be good and I want to make money forever. I like the location, et cetera. So that is always going to be the people who make the best decisions in business, certainly within real estate. And they're usually a little more thoughtful in terms of what they're going to build in the long term. But it does make it very difficult to do. It's still difficult to do in predicting floor plans and population flows, and on top of cap rates. So, but at a minimum, I think people need to think like at least further ahead, and also a little bit more with like a product-oriented experience, which is almost entirely lacking in real estate. So, I mean, if you look at your area and all the houses look the same, it's mainly because the zoning is a code. Someone figures out the highest and best use to do that one, and then everyone does the exact same thing. That's what happens. That's what happens in real estate. So like, and also real estate, similar to maybe some of the other things you mentioned, especially new development, because decisions made now are not manifested until many years down the road. It makes it even more difficult to like do them in collaboration with other people. So things like there are lots of areas. There's the opportunity zone tax credit, right, which you might be familiar with some of it, right? So that basically means like there is an area that's disinvested. Let's put significant capital and give significant tax breaks for people to do that, right? So everyone looks at the same set of data. So a lot of people are rushing to build basically new things here before we know what it is. Because that happens, they're all responding to the same data now. And I know this because I studied these floor plans, they're all building the exact same unit type. So to me, like I look and say like, well, I've rolled forward 5 years. You're now going to have a city full of all of the same unit types. And again, they're all designed in a product-oriented manner, which, it's towards a single demographic, which no problem against a demographic, but I do have like just like an investment problem with like, not everyone should build the same thing. It's just not a good long-term thing to do.
Anytime you're taking on something that's older than 1980, there's a whole new slew of risks involved, like aluminum wiring, aluminum and lead pipes, asbestos, lead-based paint, right? So those are things that are just added costs that require you to do more if you're going to actually really renovate the property. But on average, we lose about 100,000 units from the supply, at least in multifamily, every single year just due to age and obsolescence. They just phase out of the market, which means we need to build about 4.6 million net new units by 2030. And we can only build, about 300,000 units per year. So we'll be about 1.6 million units short by 2030. And then you factor in other things like inflation, the cost of building has gone up substantially, this over obsession with ESG that municipalities have now grasped onto. So they're throwing in things like utility benchmarking and they're adding unrealistic costs to projects that make it impossible to actually be able to build something that's gives you an actual return on investment. Like nobody's going to do it if they can't make money on the deal.
Since I've been a realtor, I've always noticed that there is this huge niche that's not being taken care of. And that is, it's twofold. One, all these people want to buy, but they have a house to sell. But if you've ever sold a house, you know that it's difficult to sell and buy, because when you go to buy, you have that contingency to sell. And nobody wants to accept that contingency. So what do? You're stuck. Or you have to make so much money and have so little debt that you can hold two mortgages at the same time. And let's be real, that's not reasonable for most people. So I came to her and I said, look, we can hit this market and the same market of people moving here. But a lot of people move to new cities and they don't really know where to live yet. But they don't want to sign a year lease. And so where do they go? So we decided we were going to do that. So my wife, she's an architect and interior designer. She said, hey, how about we furnish it so we don't have to worry about our place getting messed up, and we'll just put it on Airbnb. And I said, that's great. So that's what we did. And the returns that we got, I mean, my mortgage was $1,700, $1,600, somewhere around there. You add in all the utilities because you want everything in your name. So you're pushing around $2,100. I was charging anywhere from $5,000 to $6,500 a month. And the way that I would do it was, and the reason Airbnb is such a critical component to all this is not only because they have all the people, but they give you such flexibility in one simple thing. You never think about it. Naming the title of your listing. Now, if you go anywhere else, Zillow or any of the other big dogs, you can't name it. It's just 3-bedroom, 2-bath, 1,100 square feet, $5,000. Nobody clicks on it. But on Airbnb, you can go, need a monthly rental? ? We've got you covered. And that was just the bread and butter. And what I think people are missing with Airbnb is that they fundamentally think about it the wrong way. You're not getting into real estate. You're getting into customer service and trying to find a niche that is not being hit. And trust me, there's niches everywhere. Let's say you had a 3,500 square foot house. You can rent that out for corporate retreats, especially if you're in a big city. So that's one of the things I'm trying to do right now. There's corporate retreats, there's men groups. I mean, you could literally have, we could just make some stuff up right now. I mean, could you appeal to a yoga person? Could you appeal to the spiritual community? Could you, me and my wife is a plant fanatic. I mean, when we got to go to Florida, we went to a rare plant shop and she got all these rare plants. I mean, you could name your rental rare plant enthusiast heaven, just something, like obviously the name's bad, but like you get what I'm saying. Let the creativity flow and pretend you're a business owner, because that's what you're going to become. And just view this Airbnb, view this house as purely a business. Don't even think about it as real estate. It is a business now. And the number one component is providing good customer service. So always remember that when you're getting into Airbnbs. Land is a completely different beast than a single family home. And the reason why is single family homes, banks love to lend on them. I mean, they just love it, right? Land is a completely different ball game because banks don't want to value it. They don't know. The soil, the slope, the weather, the trees, does it have invasive, it's just too much. So raw land is exactly that, raw. It has nothing. It has no septic, no well, no road, nothing. With raw land, you really just have to have a goal and know what you want. And, I think the biggest misconceptions that I personally see with raw land is people have this idea, and I don't know where it came from, but they have this idea that they just go buy raw land somewhere, there'll be no rules. That you just do whatever you want. And that is just not true. There's a lot of rules. It's way less rules than living in any city. But, there's these things called CCNRs, and you still have to follow some semblance of rules. And you can't just build a house willy nilly. You need to have the proper permitting from the county. You need to know if you can dig a well. You need to know if you can put a septic. So don't think you're Rambo and you can just go buy some raw land and do whatever you want. There's still county rules. And I think that's one of the biggest takeaways too. Your county is the people that you go to. So when you're doing your own research for let's not even say raw land. Let's say it's some farmland, or let's say it does have a little mini house on it. You're going to want to always go to your county planning and zoning. You're going to want to go to your county assessors. These are the people you need to talk to. But here's some things to be concerned about for Bitcoiners specifically. One is if you're going to a typical lender that does land, farm, ranch, they don't like Bitcoin. They could care less. And so, for example, I own my primary home right now. And if I want to go get 40 acres, they would say, hey, we need 6 months liquid supply of your mortgage times 6, right? Well, that's not a problem because I have it in Bitcoin. Well, they don't care about the Bitcoin. They'll take a 401k, which is very interesting because that's not liquid, but we don't have to get into the BS of all that. But just know that that if you're looking to buy land specifically, you're gonna want some cash reserves or your what do we call it? Legacy assets for them to count. Get pre-approved. I say this all the time to anybody I work with. Get pre-approved. There's nothing wrong with it. There's no downside. And I've seen so many people be fearful of getting it pre-approved, and then this stellar piece of land hits the market, and now they're working backwards and they can't even move forward. So just get pre-approved. Like right now, I doubt I'm going to buy another piece of land, but I'm pre-approved for land. I have a HELOC and I have, potential collateral to pull from my Bitcoin. I don't think there's anything wrong with having these options available to you.
Now I'm finally building systems and processes and businesses where I don't have to do the day-to-day. That's giving myself a job. I am trying to run companies. I'm trying to run organizations. I'm trying to build teams and systems that create the outcome for my life. And I think that's a point where we need more Bitcoiners to talk about that. Like I really respect Corey Clifstein from Swan because he's scaled many businesses. Like he knows how to do it. And I think guys like him and people like you, people like me, we need to talk more about how to run a business, how to get started, like what we can do, because we do need assets and businesses in the hands of Bitcoiners because it's a different way of thinking. It's like a paradigm shift. There's the old world that's still operating, but we're building a new world and a new way to operate. And we need more people doing that to be the example to the world on what's coming.
Hey all, this is Brian. You can reach me on Twitter @BrainHarrington. Shoot me a DM with any feedback from today's episode. This has been a Choice App production. Bitcoin is becoming centric to personal finance, and we want to help you learn how to better engage with Bitcoin financial services. None of this is financial advice and is for education and entertainment only.